Happy Friday, everyone. I'm Megan Marsh, founder of Collab Brands, which is Collab Lending Franchise, broker in a box if you're looking to open a mortgage brokerage, and mortgage broker concierge. So today I want to talk about what's been going on in the mortgage industry, what's been changing, and specifically what's going on if you're a loan officer or you're a broker owner who operates as an independent mortgage broker. So in the last 12 months, the lending industry has changed dramatically when you look at it as a whole. But there was definitely a big shift that a lot of the industry publications were talking about, and you might not have seen it. So I want to make sure you know where you can look, where you can find this information in case it's something that you're considering and you want to know what's going on around you. And so we're going to dig in, and I'm going to share with you some of the information that I found about the industry and where I see it going, and the different things that I hear from talking to different business owners, loan officers on a daily and a weekly basis. And so I'm going to pull up on my screen here in a second a few things. Before I do that, I'm going to talk about the fourth quarter of last year. And right now they're putting everything together since we just ended the first quarter of 2025. But what started happening at the end of 2024 that you can see is going on in the mortgage industry? And the biggest thing that's been changing, right? All of us as loan officers, we watch what the interest rates were doing. They dipped down, then they went back up. We've got the cost of living that all of the home buyers and consumers that we're working with are dealing with. And we know it's been affecting the market. It's been slowing volume down. It's been slowing new mortgage applications down. And everybody's fighting for, a smaller piece of business right now. And one of the biggest things that really started shining through in the fourth quarter was that consumers are turning to mortgage brokers at an increasing rate. So in the fourth quarter, there was actually an uptick in mortgage applications, probably because of that dip in interest rates. But what happened with this uptick in mortgage applications was that retail lenders, even though there was this uptick, retail lending overall originations decreased from prior quarters. There was a decline in retail originations, where wholesale lenders, which are the lenders that mortgage brokers use to place loans with, wholesale lenders showed a growth in originations, but not just an overall growth. They gained market share in conforming and conventional loans, which is a huge, huge thing. Because as a mortgage broker, I'm going to talk about the things that are going on and where the biggest opportunities are. And it's not in conforming conventional, but what that tells us is that the most traditional form of getting a mortgage that everybody can do, banks, retail lenders, brokers are picking up market share in this core business, which means if you can pick up market share in that core business, the other stuff I think is the low-hanging fruit when you become a loan officer under the broker or wholesale model. And I'm using those they mean the same thing. There's so many terms we use. And so in the fourth quarter, mortgage brokers gained market share, which matches what the industry was doing, whereas the retail side, their originations was going down. Another big piece that I think is worth mentioning, because at Collab, we have a really diverse group of originators and owners, is that the Latino, the Hispanic buyers, they accounted for 35% of the U.S. homeownership growth rate, and that was of last year. It's the largest share that we've ever seen any group increasing and growing. And so making sure that you're understanding what this segment of the market needs, is looking for, is really important. But let's dig in, because what I want to do is, I'm a little bit of a nerd when it comes to looking at information. And I noticed this a couple years ago, and I found it really interesting because typically markets will follow each other globally, right? So we all know if you do loans here in the US, you're typically doing loans just in the state you're licensed in. If you're at a big company that has multiple licenses, it allows you to lend in other states. But I think it's important to understand what's going on in other industries across the globe, because a lot of similar countries and how their economic structures are formed, they operate like the US. They have banks, and then they have the independent mortgage brokers. Places like the UK, in Europe, Australia, Canada, and in countries like the UK, Australia, mortgage brokers are dominating in these countries. In the UK, mortgage brokers make up 75% of all originations. In Australia, it's also about 70%. It's grown just exponentially. In the US, brokers are also increasing their market share, but they're not up to even 50% yet. They're still around that 20-25% range. But I think we're going to see it continuing to increase at a faster rate. And there's a number of reasons, which is what we're going to talk about. A couple of statistics that I looked up: the mortgage broker market is supposed to reach about 75 billion by 2033. And let's talk about why consumers are really starting to look at mortgage brokers, use mortgage brokers more than maybe they ever have before. And I'm going to pull up on my screen so you can see a few of these. I'm used to Zoom, so when I go to pull this up, I'm always looking for my little Zoom button. So what you're looking that I brought up is just the rate that other countries, what their market share looks like. I mean, you can see here in the UK, Australia, how much in the last 10 years mortgage brokers have been increasing. Just, it's a steady climb. New Zealand, which is, right next to Australia, Germany, Canada has definitely had a squiggly line. France, and then here's the US, where the line has not been as steep. The growth hasn't been as fast as I think all of us who are mortgage brokers want it to be. But I see this change happening with what happened in the fourth quarter. And I hear more loan officers really talking about needing to go over to the wholesale channel because of a lot of the benefits that you have. So let's talk about for a second, why are consumers using mortgage brokers more than before? And I think one of the number one reasons is cost. Mortgage brokers typically have lower interest rates, lower costs, and they save home buyers money. And so there are some independent reports, if you have or haven't seen them. Here's one from Business Wire published, and it is that when they did a study, that consumers save on average about $10,600 working with a mortgage broker over working with other financial institutions. That's not a small number. Now, it does say the life of the loan when you're working with a broker. So the thing I'll say about that is, most consumers don't keep their loan for the whole 30 years, right? So I get that. But if that consumer is consistently using a mortgage broker over a 30-year period, they're still going to fall into this bucket. And I know one of the main reasons for this is that as mortgage brokers, there's only so much you can make or charge on a loan. And if on the retail side, the bank side, there is no cap. Like, they can charge whatever they want. And so if you're talking to a consumer who doesn't know this, it can be easy to take the options that they have, not knowing there could be a lower one out there. But more consumers are hearing about this. Trust is gaining since we had the crash back in 2018, 2008, not 18, my goodness, 2008. And I think more people are starting to really feel comfortable, and they want that cost savings for their families. They need it with the pinch that they're in right now. And then the next thing is that there's a lot of time saving too. It's not just the money, but it's time savings. So if you want to get a better rate, if you want to get a better term on your loan and see multiple options, your best bet as a consumer is going to be to go to a mortgage broker who is doing that work for you. They're shopping across multiple lenders and they're showing you multiple options. That's what the good mortgage brokers are doing. And they're saving the consumer time from having to do it themselves. I know mortgage brokers who literally pull up on their screen, here are the different lenders we're looking at. This one offers this one offers that. And I want to say something about options as a broker, because anyone who's come over to the mortgage brokerages that I work with, the biggest thing they say is like, I knew there'd be more options, but I didn't realize how impactful that was on my business and closing more loans, because it's not just, oh, I have different lenders to pick a rate from. It's around features that consumers want. One lender might allow a certain loan type for first-time home buyers and the other one doesn't. One will do I-10 home buyers and the other one will not. If you're talking about, DSCR loans, which this is for all my industry professionals, if you work at a bank or retail and you're like, oh, I have a DSCR option, I can do DSCR loans. Well, your DSCR loan, if you kind of wrote out all the features on it, if somebody falls outside of those features that are allowed, meaning, okay, we'll do a DSCR, but they have to have owned an investment property in the last 2 years. And the DSCR ratio has to be above 1.25. Well, when you're a mortgage broker, that's not the case. You've got 20, 30 lenders who do DSCR. Some of them will do it for first-time home buyers for a DSCR. Some of them will go below 1.25. Some go below 1. Some of them allow gift funds. The variation of what you can do makes it so that you can find a solution for a lot of the buyers you're working with. And so buyers are really starting to see that when they get turned down somewhere, and with everything being online. And so consumers are really wanting that experience. They want to have a positive experience. It's a stressful thing for them. People don't want to get denied or be told they can't do something that they were wanting to do with their family. And a broker is going to be able to say yes and find a solution more often than going to a single lender. And then kind of the last piece of this is complex. A lot of people in the US ever since COVID, our income and our job situations are changing. People aren't just working a single W-2 job. A lot of people are starting businesses, a side hustle, driving Uber, getting paid 1099, doing things that weren't as common before. And that's where the whole non-QM market comes in. And the non-QM lenders, they really, for the most part, are working with the wholesale, the broker channel. And so if a consumer has a different scenario, they're going to have more luck if they're connecting with a mortgage broker. I remember when I was still originating a few years ago, there was a customer who had been denied at 3 places. 3. Non-QM. They needed, if I'm remembering correctly, they needed some type of a DSCR or a bank statement loan. They'd gone through 3 lenders. They did not want to apply with me. I had a lender who could do it, and we did end up closing. And it was so stressful by that point. Like, they just had the worst taste in their mouth about the whole experience. Whereas if they had, that shows not only how different lenders can have different, products, but even brokers. You've got brokers who are better at the challenging situations and complex solutions for people. And it's a great opportunity for loan officers to be that expert in niches and make sure that you are getting your name out there as the person who can help these types of consumers who have these types of complex financial backgrounds and situations. And then I'm going to switch here. So we had brokers increasing market share, and it's in the US, it is happening too. So it's not that it's only happening. But if you see here, this is what they're projecting is going to happen in the US. I mean, they're projecting that the market share for brokers is going to double by, here in this example, by 2033. So, I'm going to keep watching this. I think everyone should keep watching this shift. And then the last few things is that I mentioned last week that I'm just going to bring up is the real estate industry is changing too. And I think the partnering of our industries is going to be a very important piece of this, because not only are loan officers moving from retail and banks over to the wholesale side, but we're also seeing a lot of other real estate industry professionals getting their mortgage license, integrating that into their business. It's the rise of the one-stop shop model. And there's a lot of brokerages that are leading now with, hey, you can do everything here in one place. I think it's an opportunity for both real estate brokers, real estate agents. There's ways you can do it if you own a brokerage, if you're a real estate team leader, if you're just an individual agent. There are programs now, but the key is doing it right and doing it with people who know how to help you do it right. And the best way that this morning I had a doctor's appointment, and I went to my doctor's appointment, and this same doctor 10 years ago, I mainly went to see a doctor or nurse practitioner. And then if I needed to get blood work done, if I needed to get a sonogram done, if I needed to get x-rays, I had to go somewhere else. Well, now they do everything in the office. So, I got a sonogram, my mammogram, my x-rays, I got to see a doctor all in one place. And I sat there thinking about, the smart business owners, the smart loan officers are going to start really making sure that they're connected in and that they're having conversations and thinking about this shift that's happening, because it's where consumers want to be met. It's not about always what we want or what someone else wants, but it's about what our consumers want. And they want the easy button. And to them, the easy button is, hey, I can trust this group of people who are going to walk me through A to Z in the process. And there's many ways that you can do that. And we see that at CoLab all the time as we're working with people who are builders, real estate brokers, real estate agents, loan officers, mortgage broker owners. We're just seeing a lot of really interesting business models that people are coming up with. And I think we're going to see more and more of that. And that's one of my goals, is to introduce you to some of these people so you can see the different models that are succeeding out there that you might not even realize are going on. And so, I project that when I get on here next quarter and they start summarizing everything that went on the first quarter, that we're going to see the same things happening, that we're going to see the mortgage broker market share continuing to increase, more loan officers in the market. And, for everyone who, if you're struggling where you're at, going back, listening to some of the things that people are doing and finding a way to plug yourself in to a independent brokerage that can help you continue to change your business and to lead with some of these things that people are wanting, is where you're going to succeed, where you're going to win. If you are looking to plug in with a mortgage brokerage, start a mortgage brokerage. If you have one and you want support so you can focus on growth, that's what CoLab does. We make mortgage business ownership easy. So you can reach out to our team, book a 15-minute Zoom with me, and let's figure out how to help you start making those changes so you can win in this market. Otherwise, we will be back in 2 weeks for another live, and I will see you guys then.